Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap, July 19th, 2025. And remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does right now. And this week, the market, well, another great week for the market. However, even though stocks are beating expectations, they are not wowing the market participants, and there is some selling going on. And the market seems to be a little top-heavy in here. And weekly stock analysis video, well, we're going over Netflix because they just came out with earnings, and they beat on all fronts as revenue from ads are doubling last year's ad revenue income. However, the markets are not impressed with just beating expectations, as stocks are priced for perfection and even more than perfection. But on the other hand, Netflix is as close to perfection as you can get. And our ETF video, well, the consumer discretionary ETF is outperforming the S&P 500 index this year. But are there any stocks we like in this ETF? Yes, but we also have them in other ETFs. So there are a lot of stocks we like here, but we already have them in our portfolios. Meanwhile, our top stocks in the NASDAQ 100 portfolio are doubling the S&P 500 this year. And let us look at the S&P 500. And folks, you can see that over here the past month we have gone nowhere at all. Slightly higher highs maybe during the day over here. But boy, oh boy, we've been in this trading, I don't even want to call it a trading range. It's just been flat over the past month. And down here, yeah, this indicator here is about as flat as you can get. We're in oversold or overbought condition here, as we're above that zero line, but it's staying there. Look, it stayed there for 2.5 months, so we're pretty happy about that. We can't complain, and we're right in the middle of earnings season. And I shouldn't say middle, we're just in the beginning of earnings season, as the big tech companies have not come out yet with their earnings. And when we look at the candlesticks charts of the S&P 500, we can see that we had gone back about a little over a month ago and tested this 20-day moving average, which is this green line, and has gone up, and it almost tested it the other day. So this was Wednesday in here that it was almost tested. And we were worried about this line up here coming down as the market went higher. But then the market did go down just to the 20-day moving average, barely moved at all, but it had 3 down days in a row, 4 out of 5 actually. And we did get that little correction in here, and I don't even want to call it a correction, just a test of the 20-day, then popped right back up again. And now we're still starting to get this type of formation here, slightly down as the market slightly reaches intraday higher highs, but boy, that's not moving very much at all. Then when we come all the way down here, we take a closer look at this indicator, which we looked on the last slide, and we can see it is slightly giving us a little sell signal in here. So maybe we're going to go down, back up here, going to go back down and test that 20-day moving average once again. And this week, the SPY, well, it's up 627, or it's up to 627, up a whole 3 points this week. Yeah, and the July 15 or 520 puts that we had, or that we have, expires this weekend, and so we rolled out, and not rolled out, but we went out and bought the October put. So these are 3 puts in here that we have now, and this is for a portfolio of about 150,000. We have 3 SPY puts. Now the same for the QQQs. It's 561, up 4 points this week, and the July 18th 475 put has expired, just as the SPY, and we go out to October 17th and bought the 475 put. And it's funny because the 475 put, which is about 15% below the high of the market, is about the same price as the SPY put, about 15% below the market. So that happens every now and then. It's been happening almost this whole year, but usually 15% below the QQQs is a higher price than 15% below the SPY. But what the market is looking at is there's just as much danger in the QQQs as there is in the overall market. And we're looking at the market as a whole and saying, wow, there's only good things yet to come. So we're bullish on the market overall. We'll get these little corrections in between then and now, or into the summer, because the summer is about 25% over, more than 25%. And we're getting into vacation time in August. That's when most people go on vacation. And the market will just slow right down. And then, of course, we get the weakness in September and October. And that's why we have these puts all the way out to October, because September is usually the worst month for the market. And then the market will start its correction in September and then bottom out in October. So October seems to be the worst as we think back, but it's October when it bottoms, but it starts in September. So that's why we want protection that far out, folks. So we had another good week. Well, the market did nothing, so that's a pretty good week. It didn't go down. And we're in earnings season, and the earnings are coming out. American Express and Netflix both beat on expectations. Both stocks were down, so because the market is really pricing for perfection. And folks, we're having a good summer so far, so you go out and enjoy it. Go to the beach, go for a walk, get some exercise, but most of all, be with your family if you can. So go out there, stay safe, and we'll be right back here in a couple of days.